Yeah, we're back with your GBR this Thursday. Mills Nigeria Plc releases 2022 audited financials for the period ended 31st of March. Year-on-year revenue up by 51% to 1.16 trillion naira, the heftiest ever. Gross profit was up 2% to 108 billion naira. Pre-tax profit climbed 11% to 41 billion. And net profit for the year under review, 28 billion naira, roughly 10% in the green territory. Revenue 1.1 trillion naira, 51% year-on-year. Gross profit 108 billion naira, year-on-year up by 2%. Profit before tax 41 billion. That's about 11% on a year-on-year basis. If you analyze the profit after tax, that's about 10% at 28 billion naira. Let's talk to Andreas Kristiansson, who is the Chief Financial Officer at Mills of Nigeria Plc. Great to have you on the show this morning. Very impressive numbers from this your company, consumer goods behemoth. Tell me what the drivers were for this 51% rise in revenue in a year 2021, straddling the early part of this year, considering the tight operating environment.
Thank you so much, and thank you for inviting us. Really nice to be here. What we saw over last year, we saw a couple of things. We saw the agri-allied segment of our business continue to do very well. We saw the agri-allied revenue growing by 50% plus. We saw the food business, especially our new launches, such as our breakfast cereal and the noodle extensions that we did, and the boiled food doing very well. So we saw the total food segment growing by 57%. Interesting, we saw Paco, the local packaging solution that we are offering across Nigeria, picking up, and we saw both revenue and profit there growing significantly. And from a revenue point of view, the sugar segment was solid.
Let's begin to break down the numbers. Let's look at the food segment, which rose by 270 billion naira.
Yeah, no, food continues to do very well, and it's a very interesting situation. We divide food into what we sell to the industry or the businesses, what we call B2B. That segment, our bread flour, what we sell to the bakeries, continue to do very well. And then we are selling more and more end consumer products. We see the noodles, we see the semovita, the damavita board foods, etc., doing very well. We launched breakfast cereal. We have had a phenomenal offtake on the breakfast cereal. So both the industrial sales that we do in B2B, but especially the B2C. What is interesting, we are still not covering the full retail universe in Nigeria. So we spend a lot of time on ensuring that we serve all the consumers. And the more reach we get, the more we invest into reaching all consumers, the higher offtake we see. So it's a lot of route to market behind it as well.
Interesting when you look at your return on local content investments across the farms and other local content, as we see major disruptions in the global supply chain.
Yeah, and this is a strategy that we have followed for a large number of years. We have invested heavily into the agri-allied segment, and agri-allied, the edible oil, the animal feed, and the big chunk of the fertilizer are locally sourced. We are offering local cassava. We have also been one of the leaders in investing in backward integration in the sugar segment. So we today have 3,700 hectares under plantation in Niger State by Sunti. We are today offering brown sugar produced in Nigeria to the Nigeria consumer. So what we have done in backward integration over the 5 years plus is now bearing fruit. We are very comfortable that this is the way to go. So we continue to invest in backward integration, supporting the farmers and ensuring that we have the optimal opportunities for local production in wheat, in edible oil, in maize, and in sugar and cassava.
Interesting when you look at your total assets heading towards 700 billion, and the point is, how do you sweat your various assets across the various business segments to be able to post this increase in the naira figure of what the total asset portfolio was for the last financial year?
Yeah, and sweating the asset and taking out cost is something that we're working very heavily on. We have, over the last couple of years, been scaling down investments somewhat. Last year, we reached a plateau, so we doubled the investment in new production capacity. So whereas we normally invest around 20 billion, we invested 40 billion in new pasta, noodles, animal feed lines, etc., etc. The other impact is, of course, that with the increased raw material cost, we will need to hold a higher inventory value. So we are having higher value of the stock holding. If one looks at the net debt actually decreased by 40 billion plus in the last quarter. We were basically working on supplier financing to ensure that we can get Naira-based financing for the stock holdings that we are having. But we will continue to invest, so we will continue to see the assets going up.
Yeah, you're making money, but again, we look at the cost of sales, which rose within the period under review. What are you doing to reduce your cost of sales so that at least your margin continue to remain very decent moving forward?
Yeah, and we made somewhat of a deliberate choice to ensure that we had affordable products. So the gross margin increased, but did not increase to the level that we would maybe want to see in the long run. What we are doing, we are taking out cost on a very structured basis from the different businesses. We are working very hard to ensure that we have products that make the right margin while they are affordable for the consumer. So we used to have one brand, we are now having a value brand, the premium Golden Penny brand, and we are very, very glad to incorporate Honeywell into the brand architecture so that we can offer products at the right price points for the different consumer segments. But driving up the gross margin is, of course, one of our key focus areas.
How did you deal with the interest rate and environment? Your finance costs rose from 18 billion to 25 billion naira. What are you? Tell me about your loan, your book in terms of the debt you hold on it and the cost you taking off from borrowings.
Yeah, if we look at the interest cost, it went up, and that is coming from the higher level of assets that we're holding. It's primarily coming from the higher inventory value that we're holding. In the Agralite segment, we accumulate all the stock during the harvest season, as that is the lowest price point, and we then hold 9 months of stock thereafter. That has driven up the value. We have refinanced a big chunk of that stock through some financial structures. But still, with the higher stock holding, we will see the interest costs coming up. We saw the net debt, as mentioned before, going down by roughly 25% in quarter 4. Still, the interest cost will probably remain around this level. The other thing that we have done is, given where the interest costs have been over the last 2-3 years, we now hold 72% at the long-term debt level. We raised a 30 billion bond within the last year at 5.5 and 6.25% interest rate. We have, of course, been part of the different, how shall you say, intervention funds that are available. So we have an average very affordable interest cost, and we are now managing the total debt level. As total debt, we had a debt to EBITDA of 1.4, which is in a very comfortable level.
Well, just a quick one about the Russia-Ukraine war, which is impacting global wheat supplies. How are you dealing with this situation, vulnerability issues right now at Mills Nigeria Plc?
it's probably one of course our key focus areas and our key watches. We're doing a couple of things. We continue to drive the backward integration, so we try to source as much as possible locally to not be impacted. We are driving the local segments. Two, we are also, as we see the prices going up, ensuring that we drive the value brands and that we also can offer products at different price points depending on the consumer affordability. So somebody that wants the best pasta in Nigeria, we have Golden Penny. Somebody that wants a very good pasta but maybe at a lower price point, we have the value brand, and we are now fitting Honeywell into that brand architecture. So it's going to be an interesting year, but we have seen the prices going up and down before, and we are much better positioned to handle this than we ever been.
Interesting. Andreas Kristiansson, the Chief Financial Officer at Mills Nigeria Plc. Thank you so much for your time, for speaking to us on your latest earnings.